What's going on, y'all? Hope all is well. Another episode of Convos with the CFP Mario Payne in beautiful Jacksonville, Florida. Not that beautiful, man. It's like 55 degrees. Why is it so cold in Florida? It should be 80 and sunshine. What is sunshine, though? Is interest rates going down next year. I've been telling y'all, interest rates go down, symbol TLT or TMF is going to go up and away. It's happening now. And Bank of America, big old Bank of America, is saying the same thing. So we're going to look at what they said, and as investors, what we can do if interest rates go down from a Fed standpoint, and that's going to help us. Before we get started, as always, though, like, subscribe, share to our channel as we continue to grow. You know, you can CFP, you can hit me up at painfulprofits.com because our profits is painful, but we make them. Almost at 11,000, so I thank you for your support. But let's go.
The market expects that the Federal Reserve will cut interest rates 4 times next year in 2024. If they did that, then that would heat up the economy. But at the same time, you have to remember that that could reignite inflation.
Oh boy. So they're walking a fine line because if we lower rates, then what happens, right? Costs less money to buy something. Mortgage right now being 8.5%. If it's 6%, people are going to buy houses, right? If car interest rates go down, if our credit card interest rates go down, we're going to spend more money. Great for TLT and TMF. But if inflation starts going back up, oh no. So tightrope they're walking.
So we just hope that the Federal Reserve knows what they're doing. We hope that they make the right move. The Fed minutes were just released. That gives us the details about what they talked about at their last meeting.
Yeah, what are they talking about?
In today's video, we're going to review what they said and what we can expect for inflation. The next Fed meeting is going to take place on December 13th.
Uh-oh.
There is a 98% chance that the Fed does not raise interest rates at that meeting. So
facts. So 98%. So that means we might be at the top, right? Over the past 18 months, they've been raising rates. As I talked about, we're at the top of the hill. We're at our peak inflation. So at the top. So now we're going to start going down that hill. As we start going down that hill, long-term bonds, long-term treasuries that are down dramatically will start to go up in value.
There's a 2% chance that they do.
Oh, come on.
The meeting after that is going to take place on January 31st.
Yes.
So there's a 96% chance that at that meeting, the interest rates will remain the same.
Yes.
The meeting after that takes place in March of 2024.
Mm-hmm.
That's when the market starts to expect an interest rate cut.
Boom. So the inflection point, right? As investors, you want to look at when's the best time to get in, right? So for people that want to bottom pick or buy at the very bottom, this might be the time, right? Because we're starting to creep up from a long-term standpoint with bonds and treasuries. But the confirmation, when people talk about buying at the confirmation might not be until March when they say, hey, we're going to now cut rates. When that happens, a big old spike with long-term 20, 25, 30-year bonds, 20, 25, 30-year treasuries. Now, you can buy the fund. You don't got to buy the actual bonds. But for a person who's a bottom picker, you might have some ups and downs before March. But if they do cut in March,
there's a 29% chance that they cut interest rates in March. So 29% chance, that's pretty big, but that's still the underdog. It's at the May meeting when the odds start to flip. Mm-hmm. That's when it becomes a 60% chance that the Federal Reserve starts cutting interest rates.
So let's imagine in May, right? So right now, let's go to the charts, y'all. Here we go. My baby. I sound nothing like Ashanti, but TMF is going to help us out, right? So again, in May, which is what, 7 months from now, the thought process is they're definitely going to cut rates by then. So as a bottom picker, a person really trying to buy something at the bottom, we have 6 months of momentum, right? In March, if they raise rates, 29% chance, if they raise rates, we're going to be so happy about that. But let's look here, y'all. Remember, right, when rates were at a low before they went up, that drop was at 92%. Now, this TMF, It's an aggressive way to invest in 20+ year treasury bonds. You have TLT, which is treasury bonds by itself. TMF, you get 3% the juice up or down, right? So treasury bonds, TLT fund is up by 1%. This makes 3%. It goes down by 1%, you lose 3%. So from a risk standpoint, check your risk tolerance. I'm a certified financial planner for my clients on these YouTube streets. Do your own research, not telling you what to do. But what I'm saying is, if we make this just a little bit better, come on, move, man, move, man, move. What we doing? As we can see, right? We are right now. All right, man, get away from me. Get away from me, man. Get away from me, man. Actually, whoop, I don't even know what you're doing right now. So, but right now, look at that. At its bottom, right? The low, how low can you go? The low was at $3.83. That happened 2 weeks ago. Now it's at $5.16. So literally, are we at our bottom? High profiteers, are we at our bottom? If so, look at here. It's already up by 44% in 2 weeks. Now, 44%, man, talk about lucky. Takes the stock market making 8% a year. You made in 2 weeks what the market makes in 5 years. But my profiteers, that's nothing, man. It's nothing, because look at here. Getting back to where it was April of 2022. $24 a share, which is almost 600%. I'm not saying that's going to happen. That might take 5 years. It might take 10 years. It takes 10 years. We're making basically 60% a year for 10 years. What's bad about that? It just goes to show, as bottom pickers, picking something at the bottom, we might be able to be in some good shape. And then, oh, look at the babes calling me. But then take it a step further. Mr. CFP. Well, with that being said, right, even if it gets back to this moving average line, which is 80%, right, that's close to $10 a share. So hitting back is moving average, where it's a higher probability of going up, is at $10 a share. And that might happen in May. It kind of spikes up a little bit. Then come May, it's, hey, y'all, we're lowering rates, and it spikes up. Well, you missed almost 100% return. So profiteers, the thought process is, do we buy at its bottom, which might be today, or do we wait for confirmation 3 months from now? I know what I'm doing. I'm playing it slowly but surely, dollar cost averaging in, because you don't want to put all your money in at one time. You want a dollar cost average in. I do it every Thursday. Every Thursday, I put a certain amount of in for my clients as we get into the market. We do it every Thursday. That's just what I do. But anyways, y'all, this might be a way to take advantage of the Fed lowering rates, because it will happen. Anyways, my profiteers, I hope that gives us good information on what to do. But comment below, is the Fed's going to raise rates? Are we in TMF or TLT? Or is it a pipe dream and make over 600% over the next 10 years? I don't know. What do I know? Person who manages hundreds of millions of dollars and had his own fund on the stock market, LETB. Pretty cool. Anyways, y'all, love is love. Let's be happy. It's cold outside. Hopefully your pockets are heating up, though. Let's make some paper profits together, y'all. Peace.
And you just want to get paid. Tired of making the money mistakes. Make a payment on your bills and you still late. Yeah, pay for profits to help you seek change. And you just want to get paid. Yeah, tired of making no money mistakes. Make a payment on your bills and you still late. Pay for profits to help you seek change. Yeah, cut the show and just listen. You want to feel empowered by making money decisions. Residual by the hours can get you a better living. Bitch at the check, you knowing it could be different. You knowing.